All right. So today we're going to be looking at specifically at the Dow, NASDAQ, and S&P. And if we only traded those particular indices as opposed to all the other sectors, and also current seasonal patterns that are in progress and where we're looking for certain trade signals to capitalize on them. It's a follow-up from our last meetup. All right, so let's go down a little bit here. Disclaimer. Everything we're doing is purely for educational purposes. I'm not giving you any specific trade advice. What I'm going to be going over with you today is basically how myself and Becky, who's a co-host and my trading partner, how we profit from the markets using options and sector ETFs. And this is the same way we're showing you now is exactly how we've been doing it for at least 14 to 15 years or more. And it's been working for us. We haven't really changed our approach the same way we did targets 15 years ago, the same way we're doing it now. It just, once we find something in the market that works, we just engrave it in stone and keep capitalizing on it, try to fine tune it along the way, even make it even better. But we found something that works for us. And as long as you're consistent with it, you see the benefits. And I'll be going over that big picture view a little bit later also. All right. So overall, these are the sectors we trade in our general strategies. We trade 6 daily chart strategies plus 6 market internal strategies and 6 weekly chart strategies. So when we combine them all, including these with these sectors, we have a lot of potential trading opportunities each month. Different people trade different things for different reasons, but this is the listing of ETFs which we use. And we might be adding one more soon. I'm going to talk to Becky about that later on, and it'll come up during the presentation also when you see what we're doing. All right, so before we start, let's go through big picture view of the market. I'm going to switch to a chart, and we'll do a big picture view, see what's going on, because we start usually the options meetings like this. Let's see, switching over to the chart. Daily, monthly. Okay. What you're looking at right now is a monthly chart of the Dow. This is back in year 2000. The blue line is a monthly 40-period moving average. Monthly 40-period moving average. So every candle represents 1 month. Okay, so this is big picture of what's been going on. So going into 2000 and the beginning of 2001, we're trading above the monthly 40-period moving average. And then we dip below it for 1 month, back up, and we close below the monthly 40 for 2 consecutive months. That's usually indicative of it might be going lower. And eventually we had that crash in 2001 where the market just sort of collapsed for a while. This was a 2001 crash, okay? And then the market kept going down. And then it rallied back up above the monthly 40. And people have asked me why the 40. We use the 40-period moving average on all of our charts, whether it's daily, weekly, or monthly. It was first introduced to us by a gentleman named Oliver Velez. If you look him up online, you'll see he still does presentations. But it's a line in the sand, above which or below which indicative of bullish or bearish, and also we use it for market trend, whether it's increasing or decreasing. So you'll usually see a 40-period moving average on most of our charts on various strategies, but a 40 is always on there. All right, so here we are. This is a monthly 40-period moving average. It went back above it in 2003, and it periodically will retrace back down to the 40. This is usually, if you're a long-term investor, this is the buy point. Anywhere around the 40 as it pulls back is usually a good buy point for long-term investors. If you're trading our strategies on a daily chart and you get buy signals anywhere around this level, cha-ching, you're going to get a nice rally off them usually. So any buy, even on our strategies on daily charts, any buy signal anywhere around the 40 is going to be expected to be a pretty good trade for you. All right. So, and we stayed above the 40 for quite a while. Remember, each one of these is 1 month. So it's 2004, we're in 2005, 2006, massive rally. Then came this debacle in 2000. Now, once again, it came down, touched. If you were trading on daily charts, cha-ching, this is a nice trades. Came down again, touched. Nice trades off the daily chart. Now, this debacle in 2008 with the financial markets and 2 consecutive closes, usually indicative of it's going to go lower, and it did. This was a crash of 2008. And this went right into 2009. The bottom of the market was in 2009, and then rally, 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 till we're right back above the 40. Okay. And then we've been in this rally mode, this uptrend ever since then. So periodically, it will retrace back down to the 40, then up. It'll retrace back down to the 40, then up. If you're a long-term investor, you're just looking for these opportunities as buy points anywhere around the 40. For the long-term investors, you get your positions on. You don't just buy and hold and hope forever. You can manage your positions, take profit, move stops up, so to protect profits. You don't have to hold things forever, because we still are traders. Like I said, if you're a long-term person, long-term, that's your buy point. Okay, kept going up and up and up. This 2014, 2015, and we pulled back to the 40. Add up. So again, if you're trading anything off the daily charts for our strategies, great months of trading. Pulls back again, rally, pulls back again, rally, pulls back again, rally, pulls back again, rally. So any daily chart buys anywhere around these areas, beautiful trading to the long side. 16, 17. This is 2018. It took several years to pull back again because we had this massive, massive, massive rally going on. Pulls back, buy point anywhere around the 40. Once again, long-term investors, great opportunity. This was COVID shutdown, 2020, the beginning of 2020. Okay. Came down, closed below for 1 month, and right back above. Biggest massive rally ever in history, percentage-wise. Just because there's some event going on doesn't mean the market's going to go down forever. We're in a massive, massive, massive uptrend that hasn't been broken since 2009 for more than a month, basically. All right. To 2020, 2021, massive rally. Here we are in 2022, pulls back to the 40, buy point for all the daily strategies, everything, long-term investors. This is 2022, pulls back again, closes below for 1 month, right back above. And here we are at pull back, buy point. This is 2023, April, March. Pulls back, this is October, buy point. Anywhere around the 40. And here we are right now in October, which just happens to be in line with seasonal long patterns. So everything that we expect to happen for the end of year in the October to December timeframe on the long side is just lining up perfectly, both with the reality of the market's going up and the reality of we're in a massive uptrend and markets pulled right back to support for a buy signal. Okay, so here's where we are right now. So this is big picture, and it's a similar thing on, if I pull up SPY, that's a Dow. Let's take a look at the NASDAQ. The NASDAQ is even in a stronger uptrend than the Dow. And SPY, similar, strong uptrend. Pullback didn't go down quite as low, but still rallying. Nice, strong uptrend going on into the end of the year. So, like I said, the last meetup, we went into more detail in the seasonal pattern. But what I had talked about a while ago is I'm going to go back to the handout first. And then, there we are, share. Okay. On the handout. Several years ago, someone had signed up with me as a coaching client, and they did the full program, which is the 6 daily chart programs, or the 6 daily chart strategies, the 6 market internal strategies, and the 6 weekly chart strategies. They basically did everything. And the weekly chart strategies, you know, you only look at charts on weekends because you're using weekly charts, not daily charts. So it only updates once a week. So you look for trades that are valid each weekend, not each day or every hour or something. So targets tend to be bigger, moves tend to be bigger, so because you're looking at weekly charts, not daily charts. So that's a daily charts, the weekly chart strategy. Market internals tends to happen after markets pull back, and it's usually the very, very, very first buy signals after a market pullback. And the other daily chart strategies, that's the day-to-day. We have strategies to buy markets when they're at a bottom. We have strategies to short markets when they're at a top. And we have several strategies for the middle, for trending markets, trending up or trending down. So that's the 6 daily chart strategies. But this one person, they really wanted to, even though they paid me for the full program, which is everything, a lot of potential trades, a lot of potential ETFs to trade in sectors, they really only wanted to trade the NASDAQ. Nothing else but a NASDAQ, the Qs, NASDAQ and nothing else. So I asked them, why do you won't have that many trades, so why do you only want to do this? You can trade this, this, and this. And they're like, nope, we just want to trade a NASDAQ. That's it. Okay. All right. So great. That's what they did. They just trade a NASDAQ and nothing else. That's 30 to 40 something trades a year, and they've been quite happy. That's all they wanted to do. That question has come up again recently where people wanted to really narrow down what they trade. So I asked Becky to collect stats from the last couple of years just on the major indices. If we were only trading the major indices and none of the other sectors, not gold, not biotech, not oil, not real estate, just the major indices, Dow, NASDAQ, and S&P, and take a look at how many trades there were and what the win to loss percentage looked like over the last several years if we only traded those 3 indices. So what you see on screen and in your handout, I'm going to put the link in the window again. Get a few new people in. If you take a look at the chat window, in the Zoom chat window, you'll see a link to the site where we have the handouts, the PDF. You can download a PDF from that page. And it's the handout. So on the handout, you'll see the summary of the Dow, NASDAQ, and S&P. Total number of trades since 2019, 559 trades, and overall 88% wins overall. And that's from the beginning of 2019 up until this past week. Okay, 88% winning trades. This is what the total for all 3 indices were for 2023 up until this past week. This many wins, this many losses, this is percentages. 2022, a little bit lower. This could have been a break even, might even been a slightly negative year. This one, outstanding 2021, outstanding year for trading the indices. 2020, when we had COVID, my single most profitable year of trading was 2020. Okay, just so you know, that was my single most profitable year of trading. That was both with futures and options. 2020, 92% wins just trading the indices, and 2019, 95% wins, 101 wins, 5 losses. That's just trading the indices. Now, here's a certain reality. If you were starting these strategies and you started it in 2022, you may not have had great results, and you become disillusioned with the strategies. You become disillusioned with the process. You lose confidence in me as a coach because you didn't see great results. That is usually, so that is why I always ask Becky to put together these type of layouts so people understand the big picture. Even at 80, our minimum acceptable win rate to trade options is 84% wins on any symbol. That doesn't mean that every single month is going to be a winning month. It doesn't mean that every single year is going to be a winning year. But if you average it all out, realistically, in 1 year, you're guaranteed to have 2 to 3 losing months. Guaranteed, absolutely. Those 2 to 3 losing months will be offset by 2 to 3 winning months. That leaves 6 to 8 months of the year. Those other 6 to 8 months are the wins that represent your profits for the year. You might have January, February, and March where that were great, consistent. You made money 3 months in a row. And guess what? April, May, and June, you lost money 3 months in a row. And after 6 months of trading, you are flat. You've made no money. You become disillusioned. You think this isn't working at all. It is working. It is not a day-to-day, week-to-week, month-to-month thing. Trading is a big picture thing. If you want to see the results, you can't bail out after a couple of bad trades or a bad month or two. If you understand the bigger picture and expectations of what the strategy you are trading provides. But you really have to know the big picture and what to expect. So, like I said, you might have 3 months of wins, 3 months of losses, and now you're flat. You just gave back all, you lose all confidence. I've had people literally stop trading when that's happened, and then they didn't tell me they stopped, and then I talked to them months and months later. I showed them, well, what about the next month of wins, next month of wins, and they said they hadn't even realized it because they stopped looking at it. They just stopped trading it because they were losing money, and they were tired of losing money every month. But they weren't thinking about the big picture, just looking at what's right in front of them. No, you have to take this hand out in front of your face and see the big picture. And the other 6 months would have represented a very nice, profitable year. Okay. And that's the same thing to understand here. You might be in 2019, you have a great year. 2020, picture perfect year of trading. 2021, beautiful year of trading. You're like, yes. 2022, you're like only 74%. You're barely making money, if any. You're like, you don't. If you were trading all these years and you're up to here, well, you already know the strategy works, everything works. So you understand that you have to keep trading, and you might have a slow year. It happens. Okay. If you're at 84% wins, that means 2 to 3 out of every 20 years may not be profitable. Okay, that's 80 something plus 85%. So 2 to 3 out of every 20 years will not be profitable. That's just the way it is. It's a percentage. It's the same thing. It's annually. It also works out over years also. If you have 10 years of trading, you might have nine years out of the 10 being profitable and 1 year not. Just the way it is. And this time it was 2022 was kind of up in the air. Could be hit or miss depending if you made money or not, depending on some choices you made and how you manage positions. All right. And 2023, we're right back on track. Okay. Then I asked Becky to break it all down by S&P, Dow, and NASDAQ if we were trading each one. So here's the S&P 2019, 90% wins. S&P 2020, 93% wins. S&P 2021, 98% winning trade, 42 wins, 1 loss. And that's the way we manage positions and the way we do targets, not the way you might, is the way we do it and our position management. And this is all trading the full program. Okay. So we have a lot of trades available to us. If you were just trading the 6 daily chart strategies, you're going to have a lot fewer trades. But if you're trading the full program, the numbers here represent having everything available to you. realistically, you will not be in every single trade. It's not possible to be in every single trade. You might be looking at something and the option pricing might just be a little bit too expensive relative to the size of the target. So you might miss some trades. Reality kicks in, you're traveling, you got family things going on, you're not well. So you're not going to be in every single trade. Open interest might be too low on one position, so you pass on it at that moment in time. But as long as you have the capital and you can afford to do it, you take as many trades as you can. 2022, good for the S&P. 2023, it's great for the S&P. And this is, like I said, this is a summary. And let's go down. Here are the stats for DIA and QQQ. In 2019, 100% winning trades in a Dow, 88% in 2020, 90% in 2021. 2022, if you were trading these strategies on DIA, the Dow, you would have come out a loser, okay? That would not work, all right? So Dow would have been not a great one in 2022. 2023, yes, it would. So as long as you're consistent with your trading year to year, money comes and profitability happens, but it's unrealistic to think every single year is going to be like the greatest year ever. Okay. You once in a while, you will have a year that's kind of like, nah. But it's not a bad year. It's just not a great year. So I have a question. What's the loss to win draw ratio? I understand 90% of the wins, but I want to understand the loss to win too. Are you talking about percent return on, Patrick? You're talking about if you risk $1,000, how much do you make? Is that what you're referring to?
That's kind of, I'm asking, yeah, correctly. I mean, if you risk $100, how much you're going to make? And if you risk $100, how much you're going to lose? So that lose to win ratio.
If you risk $1,000, your max loss is $1,000 because that is your established loss. And that should not, in an ideal world, that should not be more than 2% of your account in an ideal world. If you have a smaller account, let's say $5,000, $10,000, $15,000, there's a good chance. The reality is your minimum risk is going to be about $500 per trade, $500 to $600 per trade was going to be your minimum risk, and you will be above the 2% in the smaller accounts. That's reality. At the first profit target, worst case scenario, you're looking at an anywhere from a 3% return to a 30-something% return in the worst case. Personally, I average a 25 to 60% return at the first target because of how I enter positions. Okay. The more eager you are to get into trades, the lower your percent return will be. If you are more relaxed and patient and don't rush to get into trades, you will actually end up entering positions at a better price than expected, which will end up giving you a bigger first target than expected. So where you might have normally gotten a 10, 15, 20% return at just the first profit objective, you get it at a better price than expected. All of a sudden, you are getting a 25, 30, 40, 50% return at the first profit objective just by being more patient and not rushing to get into a trade. People who are new to this, they will tend to rush to get in because they don't want to miss it. But the more you've been doing it for a while, the more relaxed you get and end up actually making more money by being relaxed. If you do the minimum amount of work and you are rushed and you get in right at the open the next day type of thing, and you're risking only 2% of account per trade, then you're looking at a 10 to 20% annual return on account. 10 to 20% annual return on account, doing the absolute minimum amount of work and not being patient. If you are patient and you want to do more work trailing stops and managing positions to capture more profits, then you're looking at that 20 to 40-something% annual return that requires more work and more patience. So many variables in there depending on what you want to do and your personal situation. But that's something I work with people one-on-one, because everyone has, some people can't be there in the mornings when the market's open, which is actually a good thing, actually. And some people literally can't be there most of the day because they're working and they have other obligations. So you can't be in every trade, and not, so we got to find a situation that works for you. But bottom line, it's a 10 to 20% return at the low end, doing the minimum amount of work, 20 to 40% return on account. That's on account, doing more work and trailing stops. But it all depends on your particular situation and lifestyle and everything else, and funding. More money you have, the easier it is to capitalize. I'm gonna do one more here. See, that was, now let's say you can't afford to trade DIA because we buy in the money options. These are all one strike in the money. We do not buy out of the money options, and we do not buy out of the money options, and we do not buy out of the money options, and we do not do spreads. This is buying calls, and this is buying puts. One strike in the money, okay? So if you're trading DIA, Q, or SPY, it's not inexpensive, okay? So I asked Becky to put together stats for XLI and XLK. That's part of our list also. XLI is the industrials, and it's 90-something% correlated with DIA, the Dow Jones Industrials. And XLK is a tech sector, which is also 90-something, about 93% correlated with the QQQ tech, okay? So if we would, these are a lot more reasonably priced so that most people can trade them, okay? So this is on our list also. XLI, so let's take a look at XLK first. This was 91% wins overall from 2019 to 2023. Go down to 2019, 86%, 100% wins in 2020, 100% wins in 2021, 2022, really good. 2023, perfect trading, just trading XLK instead of the Qs, okay? Following the rules. That's with all strategies in play, market internals, weekly and daily chart strategies. That's with everything in play. One more, XLI. This is in place of the Dow. 2019, 100% wins. 91% wins in 2020. 100% wins in 2021. 89% wins in 2022. This is actually, it was actually more profitable to trade XLI than DIA. Remember DIA in 2022? Go back up. DIA in 2022, there were more trades, but lower percentage of wins. Okay, 66% wins. XLI, it's little brother basically. Fewer trades, but big difference in number of wins and number of losses, okay? In 2023, here we are right now in 2023 up to this point with XLI. So there's always, now, something we haven't traded, not on our list, but we haven't traded it since probably 2009, 2010 is, someone was asking about the S&P. Do we have an option, a choice to trade the S&P, a less expensive choice? And let me show you this real quick. Let's see, I'm going to change the view to my brokerage account and show you XSP. Okay, this is an alternative. XSP. We used to trade this, like I said, back in 2008, 2009 timeframe. It's the mini SPX options. So it is a lower price alternative way of trading the S&P. If you can't, if SPY is outside of your price range for the S&P, because it can cost us $800 to $1,500, $1,600 for one contract. This might be an alternative. You can take a look at it. Let's take a look and see what January options are going for. Let's just see what this for fun, see what the numbers look like. This is a lower price alternative. Still in the $1,000 neighborhood. But the only thing is you don't have a lot of open interest for options. So this is stuff we use to trade with spreads, but only near month. Like the near month has a lot of option volume, but a couple months out. So this is why we didn't add on our list an alternative for lower price for the S&P, because our lower price for the S&P would have been XSP, but it just doesn't have the open interest needed. There's open interest. It just doesn't have the volume and open interest to trade. Because I've been asked a couple of times, how come we have a lower price alternative for the Dow, a lower price alternative for the NASDAQ, but how come no S&P? This is why. It doesn't have the open interest and volume, but the near month always has a lot of open interest. So this is what we used for spreads back in the day, but not right now for this type of strategy. Okay, I'm going to switch back to the handout. And I got a question from David. Do you recommend any prop firm for option strategies or just your own capital? You already had experience with this, David. You know, you got to play by their rules. So why don't you tell us your experience, David? Come on. Unmute.
Sure.
Go ahead. Tell us
Yeah,
doing this.
So with the option strategy, it's a little bit tricky, right? Because you're holding positions overnight and over the weekends. A lot of prop firms do not like that, and there is a limit amount of capital you can actually have at risk at any point in time. So with this strategy, you could have like 10 to 15 positions open. And if you're risking 1% per trade, that's 12% of your account. If you're risking 2%, that will be like 20% of your account. So obviously, even though it's not, they haven't reached the target or it hasn't hit the stop loss in their books, that's kind of like a no-no. So you're limited to the amount of positions that you have open. So that's yeah, I would say that's kind of counterproductive in terms of prop firms. Yeah.
Yep. So that is, I know you've had experience with this because you tried it with the people you're working with. But yeah, so these strategies work better in your own personal account, because if you have a overall drawdown, it's not a loss, it's just a drawdown, because over time the numbers work themselves out. But yeah, if you're trading someone else's money or by their rules, you got to follow their rules, and they're more, I'm assuming they're not like put on a position and hold it for like a month or two. Are they more like in and out in a short amount of time type of trades, David?
Yeah, at least with the firm that I was working with, they're a little bit lenient. But even then, if you have multiple positions up and they're like, hey, what's going on? Because some trades could take anywhere between 3 days or a month and a half, right?
Yeah.
So there might be like some pressure on your end to like either close a position or stuff like that, which throws your numbers off for sure.
Yeah, I had someone who I was working with, and he was doing Forex at one of those type companies, and he had to live by their rules, and he wouldn't do anything. He was trading out strategies and he was making money. There was no problem. He was making money trading out strategies, but for the same reason, he might have had 4 or 5 trades open. So his total drawdown was below a certain level, which was not within their acceptable limits. And what they would do is actually, whenever he went beyond the firm's acceptable limits, they would penalize him by shutting down his account for 1 week. Literally shut him down for 1 week. He wouldn't do anything wrong as far as our strategies go and profitability, but it was outside of their acceptable risk limits. because he was working with their money. So these strategies work well with individual accounts. If you're trading your own money and you have full control, they work really well. And I know some people have already talked to about how to get extra profits out of it. We might take a quick look at that this afternoon also. Here's some recent trade, but I'm going to go to the actual spreadsheet, take a look at trades. I'm going to switch over. This is in your handouts, recent trades. Let's go to the spreadsheet and we'll talk about that and look at a chart. Actually, let's stay right here for a second. If you have downloaded the handouts, you're going to see where it says these setup numbers. These represent our market internals trades, okay? Our primary buy signals have not happened yet. They're getting close, probably within days. Our first buy signals we get are usually the market internals, put-call ratio, where we use the put-call ratio as a market sentiment indicator to tell us when markets are turning upward after a market decline. So you're going to see these bunches of trades around market declines and market bottoms. So if you already have the handout open, keep in mind around the end of October and a bunch of them mid-October, and down here beginning of August. Beginning of August, we'll be at a bunch of them. These are all market internals. Beginning of August, end of October, and beginning of October. So this last month has been all market internals. I'm going to switch over to the chart, and we'll take a look at how that translates on the charts. And it's not buy signals you can see on the chart, because you'd be like, how is this happening? Market sentiment and market internals. We haven't done a market internals seminar in a couple of months, but it's a really, really great set of strategies for market bottoms. So end of October, we had, if you take a look at the handout, we had a bunch of buy signals on 10:30 through 11:02. So 10:30 is when we had our buy signals right here. So these 2 days we had our buy signals, and we had another one right here on a gap. So here is where we had our buy signals from the market internals. That's telling us from option sentiment combined with a technical indicator that the markets have been declining, and we're looking for the market to turn upward and cha-ching. Nice profitability. The market internal buys are usually our most profitable trades, and the reason is because these are the lowest priced options we get. Okay, these are the lowest priced options we buy. So when we get a buy signal on 10:30 and we're entering the next day, anytime the next day, and then we get a gap and a gap and a gap, you can quickly get a 60, 70, 80% return and still be in this trade, depending on how you're managing. You can do one target only, and you're going to be out in 2 or 3 days with a nice 30-something% return on your money within 2 or 3 days. But if you're trailing stops, managing positions, you're going to be doubling to tripling your money after 2 weeks, because you're still in this trade trailing stops. Okay. That's why we like market internals. So I think it was Patrick that asked about the percent return and stuff like that, profitability. Everything I talk about is usually based on first target only. So first target is literally just, if we get a buy signal on 10:30, the next day, this is the Qs. The next day, the ATR on 10:30, $6.34. The next day, the market opened at 349.23. Take a look at the data box here for the open price. The next day, the market opened at 349.23. What I do is add the ATR from this day, $6.34, add it to the open price this day, 349.23, and that becomes my first profit target, which is going to be somewhere around here or in between. But when this gaps up, we went from a 25-30% return at the first target within a couple of days to now we're into that 50-60% return, and still where you sell part of your position and still trailing stops where you're up to like 60-70% return overall, and it's still going. Okay, so profitability, anything I tell you is going to be the worst case scenario, which is just the first target, which is going to be anywhere from 3 to 30%. Reality is you do more work by trailing stops and managing positions, then you catch the bigger moves and the bigger overall returns. So I always quote you the worst case scenario, not best case. Okay, and on the dates on the handouts, you should see a whole bunch of market internals buys for 1019, 1023-ish. Here's 1019, 1019, 1023-ish. These trades initiated in around here all hit after this gap up. So you had a bunch of trades in play from here and a bunch of trades in play from here, all hitting at the same time on this gap up, and all going way. So the trades from here are all giving you more than 30-something% return because you're still in them. The trades from here are giving you way more than that because you're still in them, trailing stops. And we haven't even gotten to our regular 6 strategies yet, okay? This is just a market internal, which are always the first buy signals, okay? And we had a bunch of them on 8-7. Let's see, 8-7, August 7th. We had a bunch of market internals buys, and it went against you for a couple of weeks, and then cha-ching, hit first targets. We had a bunch of them on 8-29. Here is 8-29. So market internal buys. First target is going to be hit within 2 or 3 days. If the ATR is 675, we're entering 374, and the high is 380. So we got multiple buys going on at different times, but usually after the market pulls back. And you take a look at the handouts for the date. It was valid, and see what the ATR was. If the 5-period ATR was on date was valid, you add that to the open price the next day, and that will be your first profit target. And we only trade in the money options, the first strike in the money. The amount of time for the option is based upon what you see in our trading plan. So we have specific rules on which option to trade, how much time is needed, usually 1 to 2 months, but sometimes it might go out to 3. So it all depends on the strategy and what is called for. Market internal is a little bit different. I said those are the least expensive options, so they tend to give you a bigger percentage return on your money. Now I said I would take a look at the spreadsheet. Let's see. Okay, this is the spreadsheet, and if you want a copy of the spreadsheet, let me know. I'll send you a copy of this one that has all the trades. So here is the DIA, SPY, and QQQ, the same stats that are in the handouts that are on the spreadsheet. Exactly the same, but here's actually a list of trades going back from 2023. So these are all the valid trades over the last couple of months. And this goes all the way back to 2019. All this stuff is, these are no big secrets as far as the listing. They're on my website. I make them available for people, very transparent on this type of stuff. So if you want to go back test it, you can. The weekly charts trades have a bigger first target than the daily chart trades. But how you enter it can make a big difference there too, and how you manage it makes a big difference. So all these are all available on our website that you can back test and put it in the spreadsheets. But when you take this data that's on the website, you can take a look at any of the sectors we trade and do something similar and see what it looks like. So you can put together different combinations of things you want to trade and make sure it looks good to you. So like I said, for this situation, because some people have been asking me just about trading the major indices, and if you can afford to trade the major indices, that's all you want to do. You don't have time to be placing 15, 20 trades a month. All you want to trade Dow, NASDAQ, S&P. This is what it looks like. And it's very, very profitable, very easy trading. There's so little slippage in the bid-ask spread because you trade something like the Qs. The volume, the option volume is just so incredibly massive that you literally have no slippage. It's literally a penny wide spread on the bid and ask. So there's just massive, massive, massive option volume. So the open interest, your fills are immediate. Very, very little slippage, if any, on anything. So that's why trading at the Q is the perfect one to trade, and similar for S&P and Dow, SPY and DIA. It's not as liquid for XLK and XLI, but for smaller accounts, they're fine. If you're a big money trader, then you want to stick with SPY, QQQ, and DIA because they can accommodate you. And on this same spreadsheet, I asked Becky to put a separate sheet just for XLI and XLK, so everyone can do their comparison. If you want to trade XLI and XLK, these are all the strategies we trade. You won't see the market internals on this list because market internals are only for SPY, QQQ, and DIA. Market internals are only for SPY, QQQ, and DIA. The people who are existing clients, they know they have XLK and DIA stats as an alternative if they want to use it, but that's the alternative is still based on SPY, QQQ, and DIA. But they have an alternative if they want to use it, if they want to accept the additional risk of trading those, but they have the information. But market internals are just for these three. But for all of our other daily and weekly strategies, so that's 6 daily chart strategies, 6 weekly chart strategies. That is the numbers we're looking at but it's for the full, once again, the full program. And you have the full list of wins and losses through 2019 through now. Now, is this all we have? No, we have all these stats going back to the year 2000. Okay. But we have it by ETF, so it takes time, work, and effort to put stuff into this format. I asked Becky to do this so people can get a big picture view of what trading the strategies look like, so that people can understand that the consistency is what makes it work. If you want like one particular ETF full history, you have a choice. You can either, if you already know the strategy, just go through the charts and log the dates yourself, or you can email me and I'll ask Becky to put together maybe one for you. But this takes time to take it from individual ETF and stat sheets to put it into this format. So, but this is a good representation of what to expect when you only trade. Now, if you go on our website right this second, you will see the spreadsheet with every trade over the last 4 years on every strategy. Okay, I'm just going to go to that real quick. And I was going to do a different share and go to, okay. So on our website, just so you know where it is, on this page, valid trades, win-loss status. This is where we have the handouts, the PDF, and the listing of valid daily chart option trades over the last few years. So this file will have all the option trades for all of the strategies, not just Dow, S&P, and NASDAQ. On this also, if you go to the home page, a little bit about me. Yes, I do a lot of stuff, and trading is what allowed me to leave my full-time job back in 2009 And I kept telling the folks at work, I worked at Lockheed, software engineer at Lockheed, and I kept telling them stuff I wanted to do, and they kept telling me, well, when I retire in 20 to 30 something years, I'll have time to do all that stuff. And I was like, that's basically a sentence. I'm sentenced to be at Lockheed for 20 to 30 years before I can actually do anything I want to enjoy outside of work. And I was like, oh, hell no. So that's when I started, I need a plan to be able to leave here and still be able to pay my bills. And that's how trading came into being. Myself and Becky, we found our first trading workshop. It was Invest Tools. That was our very first experience. And then we kind of kept growing from that point on. But now, you know, trading only takes me maybe 30 minutes a day, maybe 45 at the most. Realistically, I can review all my futures and ETF stuff in minutes because I know what to look for really fast. And that's how I train people how to do it, how to look at your charts and do the review quickly. So it shouldn't take very long. But the SAG after strike is over. I can get back to work now. I work part-time as an actor and doing stunts, so I can get back to work on films and commercials. Finally. It's been a few months. So, and I'm also a city official in Santa Clara. I have time for that. And I train in jiu-jitsu. I teach kickboxing and other fitness classes. So I'm always active, running around, doing stuff around town. And I always look for different things that interest me which I could never do if I had to sit in a cubicle 40 hours a week. So by getting out of the cubicle, I'm not locked in there anymore. Now I have time to do what I want to do, experience different things, give back to the community through my work as a commissioner in the city of Santa Clara, and just keep growing. While I've always been a teacher. I help people. So when I started training and teaching kickboxing classes, I actually ended up training instructors, and I literally would travel the world training kickboxing instructors. I went all around the US and Europe, South America, even to South Africa, training kickboxing instructors. It wasn't something I planned on. It just sort of happened. Like I went to sell videos. I made a kickboxing video, went to the biggest fitness convention in Las Vegas to sell it. And next thing you know, opportunities come up just by putting yourself out there. And I was asked if I could, a presenter doing something kickboxing didn't show up. And I was asked, can I do a workout in their time slot? So I did. Next thing you know, I'm being invited all over the country and all over the world to come teach my program at their clubs and facilities just by that chance. But that's what I've always done. I'm a teacher, and I believe in sharing knowledge because I can't accomplish what I've accomplished without other people helping me along the way. Some paid, some unpaid, but I needed help, and I wish I had known that when I first started. Because myself and Becky burned through probably about $30,000 in losses or more, and doing educational programs also with schools. And it wasn't really until we found people who trade their own personal money and the strategies they were teaching were strategies they actually personally use, is when we really started growing and evolving. Okay. Number one was Jake Bernstein and John Carter, Hubert Centers, and several other people. David Elliott was probably the first one, Price Headley, and several others along the way who just stand out. Okay. Got a question from David. David, who were your trading mentors? Okay, like the people I just mentioned. John and Hubert were probably the first one. John Carter, Hubert Centers were probably among the first, and as my foundation for futures trading. And they're the ones who created the squeeze indicator. So we run a lot of stuff with the squeeze. That's back in my day trading days. And also David Elliott. David Elliott used to give his time free online every day to mentor traders. Okay, and I learned a lot from David. And one big thing he said was that He became really good at what he does by literally looking at the charts. It's not, he didn't write algorithms, right? No, he looked at the charts so you could see things on the charts. And I told Becky the first time I talked to him, went to a presentation by him, is that I'm going to look at more charts than David. And that's what I've always done. And I've put in probably conservatively 25,000 hours. 25,000 hours would be conservative on how much time I spend, even to now, each week doing analysis. I'm always looking to improve, get better. I'm never satisfied. I want to be better. I want to be better. I want to be better. That means looking at charts, finding ways to implement. I know 20, 30 different ways to enter a trade. I know 20, 30 different ways to have a stop loss. I know 20, 30 different ways to manage positions. What combination of those 20, 30 different ways will work best on this particular strategy? I'm always going through all those variations. There is no one best way of doing something, but there's always going to be a better way than what I currently have. There's always a better way. I'm always looking for that better way. And when I find that we tweak strategies a little bit, tweak things here, tweak things there, because, hey, after I spend another 47 hours working on this one thing, that's the engineer part of me, I found how to improve the strategy by 5%. Okay. And that's me. That's the way I am. And that's what I do with some of my free time, because for me, analysis is fun. Right. So on this page also, a little bit more about me. And here, if you want, I did this. I recorded. I was interviewed on a podcast a couple months ago. You want to check it out if you haven't already seen it. And one of the option videos, futures video. And this was what I talked about today. We talked about years ago, because this is 2020 with all the trades laid out on one chart for all the trades on the NASDAQ in 1 year laid out. And this was inspired by when that person asked me about just doing one strategy, ultimately one ETF only. So that's when I was like, I hadn't even thought about that. Then I just went and laid out all the trades on one chart, and it was like, wow, buy, sell. We sell at the very top, all the buys, and all the sell. And it came out to 90-something% winning trades. Okay. So that image is there. That's something to go through also. I don't recommend books. This is the only book I ever recommend, the Stock Traders Almanac, because what it shows you is seasonal patterns. And the strongest seasonal pattern is the one we're in right now, which is end of year bullish. So when we look for a buy signal, we went over this last time a little bit, a lot actually. I'm going to switch back, but this is the only book I ever recommend to anyone, because you combine this with all of your other trades strategies, then you'll probably improve on your profitability, knowing go long at a certain time, go short at a certain time, because when your buy and sell signals have them line up with expected market trends, then your trading profitability can increase significantly. I'm going to switch back to the handout. Here we go. The seasonal pattern we went over last time. This end of year, this is from Seasonal Trader, the image. But from October through December, the very definitive, this is 40-something, about 40 years worth of data from 1983 to 2021. Okay, so almost 40 years worth of data. And it's a composite chart. But it's a very definitive uptrend from end of October through December. So when we tend to get a buy signal on our strategies in this time period, it tends to do really, really well. Okay. When we get a sell signal in the September timeframe, they tend to do really, really well, like this year. If we get a buy signal in the end of August, it tends to do really, really well, like this year. I'm always telling people the market is doing exactly what it's supposed to do. So when we see the market going sideways to bearish the beginning of August, when we see it going bullish the end of August, when we see it going bearish in September, if in the first week of September-ish, we see a sell signal, you jump right on it, because seasonally, this is perfect timing. If we get buy signals in the middle of October, beginning of November, perfect timing, jump right on it. But this is our biggest, strongest seasonal pattern that we look for and every year and wait for it, because it's like end of the year, it's finally here. Okay, and I'm going to switch back to our charts and show you where we are in the daily chart right now, because we're just waiting for it. Those of you who are familiar with the Donchian cross strategy, we're looking, this is the Donchian mean line, this orange line, this is the 40-period moving average. We're looking for this orange line to cross above the blue line. That's our buy signal for the Donchian cross. If you traded this with me before, it's been the presentation, you kind of know this otherwise. So on our list of trades, when you see Donchian cross, it means this orange line crossed the blue line. And then we're looking for buy signals, which are going to, for the major indices, is going to, and for most of the ETFs, is going to be 84 to 90-something% wins at a first target expected. Okay. So that's the cues right now. We're getting close. We're getting close. The market internals already hitting. Market internals are already got down here. Market internals, those already hit. Now we're looking for the 6 daily chart strategies to be hitting. That's cues. Here, take a look at SPY. This is SPY right now. We don't have our buy signal yet. It's getting closer. We had Ichimoku buys. Okay, we had some Ichimoku buys. That's our second. It's the second one from a market bottom. Not showing you on this chart, but there's another buy setups we have that's already been hitting. And DIA. So the major indices are all setting up for this buy. As soon as we cross this end of the year timing, I went over this in detail at the last meetup. If you didn't see that video, it's on our YouTube site. If you don't know where that is, message me later. I'll send you a link to it. Email me. My email's on the handout. Just email me or go to the contact sheet on my website. Message me. I'll send you the link to all the videos. We went over this in real detail last time also with the seasonal pattern. That was the topic of the last meetup. But a lot of the other indices or industries are all kind of in a similar type deal. Let's take a look at the material sector, XLB. It's getting closer. We're just waiting for that line to cross. Then you're going to have a ton of buy signals. Let's take a look at financials, XLF. Not there yet. So all these things are coming up slowly but surely, okay? Retail. I know we're not there yet. Oh, we did get a buy. We got it crossed over on retail, then pulled back. So retail already has the buy signal and a pullback. Okay, so retail's already in play. Home builders don't have it yet. So a lot of these indices, they're getting closer. That's why it's real important this time of year. Let's take a look at the Russell. Russell, not quite there yet. So timing wise, everyone is in a good position right now to be ready to capitalize on these markets in the end of the year. And like I always say, the best time to trade is October through April, because we get the biggest trends and most predictable seasonal patterns. So if you're interested in working with this with me, let me know in the next couple of days. This will be my last meetup most likely for this year, most likely, unless someone really wants us to take a look at something. For our 6 daily chart strategies, this is what I charge, and anyone who wants to do this with me, let me know before the week is over. Take $100 off of this, $16.50. We get into it right away. It's one-on-one. I don't do groups. I do one-on-one. I don't lecture. I guide you. This is a lecture because I just one person talking, but when it's you and me, then I guide you. And you have to work. You will have homework. You got to do your homework. Don't do the homework, we don't get very far. I expect you to work and commit 6 to 9 months. The same way I showed at the beginning, where you might have where we had 1 year of like 3 years of wins, 1 year of meh. and then 2 more years right after that of great trades. That's reality. So you have to, if you're trading now, you might have the first 3 months really good, then another month or two, blah, blah, blah. Yeah. And then I need you to get through 6 to 9 months. I need you to commit to 6 to 9 months of trading the strategies the way I tell you to do it. And then you'll see the other side. And then that's why you really got to commit that amount of time dedicatedly to trading the plan the way I show you to trade it to really appreciate it. As long as you're keeping your risk to a certain size and follow the rules, you can't take a big loss. Okay, and then it takes about a month or two to kind of get your groove, make your mistakes the first couple of weeks, and then find a sweet spot for how you want to trade. Because as an example, I'm going to go back to the chart for a second just to give you an example of what I mean. Okay. Let's see. Okay, here is I'm trying to find something that goes against you. Everything I find just works too well. And I want to find a bad trade. I can't find a bad trade. Wow. Okay. I'm finding phrases that are too good. Trying to find something that's annoying. Okay, here's one. Okay. Orange line crosses blue line. To do the minimum amount of work, minimum amount of profits, minimum amount of everything, you get in at the open the next day. Okay. ATR this day is $5.06. You put in an order, you buy it in the money option after the market opens, you put in an order to sell your contracts when when SPY moves $5.06 higher than the open price here, which is going to happen somewhere over here, probably this gap. Now, that's all great and good. I will never get in here because I have learned from being patient, you get better prices by being patient. Okay, so I'm not going to get up in the morning to rush to get in here. It just ain't going to happen. I know some people on the meetup right now, they will stay on, they will go online, they might get in somewhere down here. So they have a little bit better than 5. They might get, if it went from 348 something down to 347, they might get instead of a $5.06 target, they might have a $6 target because they got a little bit lower. Okay. What if you got in the trade this day, or this day, or this day, or this day, or this day? Okay. Up here, your target is $5.06, which puts your target up here. Probably this gap is when it gets hit, which is going to be really sweet. But that's at 340. That open is 348. Let's say 349. Well, what if you got in when it was at 339? Because you have a life, you have other things to do. You missed this trade, you have other things going on. So you get in at 349 when it's down here. Now, instead of having a target of $5, now you have a $15 target. Okay, now is where instead of expecting a 10 to 15, maybe 20% return to first target, now you're expecting a 60, 70, 80% return at the first target and then some. Okay. That's what I'm talking about, getting in a better entry than expected. The more patient you are, the less you care about getting in right away, the more money you end up making. You get in, you have 3 weeks, 4 weeks to get into this trade. As long as you're below the open price and the target hasn't been reached yet, that trade's in play. So the more you relax, and so what I'll do is I'll go, after I see a big down day, I'll go like, hey, we had a big down day. Let me see if I can get in this trade the next day. So I won't get in here. I'll wait for another big down day. And then, okay, now I will start looking here. But I might have other stuff going on. So I might miss this trade totally. But then I realize over here, I'm like, that trade was valid back then and I'm just not in it yet. Let me go ahead and get in now. And then all of a sudden, So like I said, this is more what my trades look like. I get in well after it was valid, as long as it hasn't moved up yet. So I get 25 to 60% return to first target, not the 3 to 15, 20 something percent return. So I get in, I'm more patient. I can do less trades, make more money, type of things. And if I get in down here, I don't have to wait for up here. I can get in down here and get out here if I want. I can have a 8-point target, 9-point. I have choices now. Okay. So that's how I trade. I get in at better prices and make a lot more money when I do trade. On current trades I'm in right now, I tell you, I'm trading XLI on market internals, and I got into the market internals down here at 98 something, and it's at 102 now, and I'm going to get out at about 104. 103, 104 is supposed to, 104 is where I have a target set to. So I got in down here, I'm going to get out here. The trade was valid over here someplace, but it went against it. So I got in late. I'm like, perfect, I got in down here. So I don't rush to get into the trade. I got a much better price than expected. I just ride it back up. All right, so back to the handout. And that's all stuff we go over in more detail when I'm working with people one-on-one to look for those type of opportunities. But if you want to work with me, let me know. $17.50 for the daily chart program. All the details are here. I'll try to meet with you either online or in person. If you want to come to Santa Clara, I'll meet with you in person. I've always prefer in person if possible, but that's not always possible. And for the full program, that's where we do the weekly chart and all the daily chart and the market internals. That's a $39.95. This will take more than just a day or two to implement. This takes a little bit more time. So, and work and effort, because when you have everything available to you, you're not going to learn everything like that. It takes a little bit of time. So I will take $500 off this price, make it $34.95. Let me know before the week is over. Thanksgiving, we have a long weekend coming up. If you're free to work with me, perfect timing. Or next weekend, I'm always free several afternoons a week, several mornings a week. Just have to schedule time with me. And we'll set up either Zoom or in person. But like I said, I have free time because I trade and do other stuff, so I'm not locked into a cubicle anymore. I don't want, this is not a full-time job for me either. I only pick up 1, maybe 2 coaching clients a month, because I do this all one-on-one, so I make sure I have time to commit to each person. Okay, I only pick up 1 or 2 coaching clients a month. That's it. Because I don't want anything in my life to feel like a job. I want to be able to enjoy what I do, everything I do, because I can go teach a class. I teach at Google. I teach at Santa Clara University. I teach at other corporate sites, Palo Alto Networks. I teach at Apple, but I'm only there for a couple hours a week, and I can leave. Okay. I teach UFC gym. I teach at Half Gracie Jiu-Jitsu. But I can go to all those places for a couple hours a week and leave. I'm not locked in anywhere for hours and hours. So I get to have fun. I don't get burnt out on any one thing or any one place. And that is the benefit of trading these programs, whether it's futures or options, but having everything available to you. That's why I really like the full options program. I got a couple of people on right now that have access to this, and they like the flexibility of being able to trade what they want, when they have everything available to them. The only big secret is you need more capital sometimes to be able to afford to do everything. So you have to pick and choose, but the bigger your account, easier it is to make money, like anything else in life. All right. Do we have any questions? This is going to be the last meetup of the year, unless I got some people that want me to go over something else between now and December. Otherwise, we'd be off till January. If you want to work with me, get ready for trading right now through April, because it's a great time to profit right now. Great time. There literally is no better time than right now in that time period. Email me, call me, my phone number, everything is on the website, contact page, also on the PDF handout, which I'll put another link into the chat window for the handouts. And unless we have any questions, if you have any questions at all, just feel free to unmute or type it in. Anything at all. I'm fully open to any, and I'll answer anything you want me to answer. You got 15 seconds. Anything you want. I don't care what it is. You got full open book. Anything you want. This is it. No secrets, nothing. Everything's open. All right. Then until probably 2024 January, we'll do our first meetup in January, unless someone really wants me to go over something before the year's over. And if you want to work with me as a coach, like I said, I'll meet with you either in person in Santa Clara or via Zoom. And I'm pretty flexible on schedule, so I try to line up with whatever your time you're available. I'm constantly flowing with whenever you're available. We just find a time and we make this work. All right, then I'll be in touch with you guys in near future then. Have a good Sunday. I want to finish watching the 49er game now.